Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll time wire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you get it back. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. So, yeah, the title today, what the heck did you guys do? Like, that's a serious question. What the heck did you guys do while I was gone? The market just, like, totally puked. Charts. Where's the charts? Minimize that. Okay, so like, the treasury's down. They were down pretty big on Monday, right? Big recovery, and then down the rest. Okay, like, I get it. Like, everybody hates treasuries. That's fine. That's fine. But the S&P 500 also just puke. They're down again today, kind of opening at the lows. So if they open the week with another plunge lower, like, that's not good. That's really not good. Let's look at some other things. Let's see what else we can sort out from the macroeconomic framework. Oil is towards the bottom of its range, also taking some fairly significant dips. It's not terrible though. Okay. Nothing. Okay. Natural gas just continues to go. Can you believe it? Like, way back here, we were like, well, natural gas doesn't seem like it's quite going, but oh, it went. Okay, gold and silver maybe finally breaking out of their range here. I don't know if that's one that you can just go on the momentum with. They might like break the highs and then flip back around again. I don't know. Although you kind of have to wonder what's pushing them up. And I do think that Russia and all this other stuff is probably creating some bid in gold and silver. So probably in the long run, maybe you're okay there. Copper also not terrible, but copper at the bottom of its range. And we're going to come back out here. Bitcoin. Well, Bitcoin had a run. I got to tell you, man, when they had this run and I was out, this whole period, right? They were like really pushing the social media hard and everything and celebrating. And they had like that big Bitcoin conference, but look, it's going lower. Seems again to be correlated to the S&P 500. And then you've got the dollar almost up touching 100 at one point. Like, what the? Okay, so what's going on here? Well, we got a bunch of things, right? Lael and a couple of other Fed speakers came on last week and said stuff. So that really, oh my gosh, I gotta fix the sources here. Display one. There we go. They really came in and, riled up the interest rate market. I do think that maybe there's a chance that we have a little bit of a pullback today, but we do have two Fed speakers today. We do have two Fed speakers today, so that may not be done. Okay, so let's just shove that for a second. Then we got the Ukraine war, which is a problem, and then we've got lockdowns in Shanghai. So I'm not 100% sure what you do with the treasuries in this instance, because like I'm not in the camp of like there's going to be a recession yet, but I mean, it's starting to look awfully bad. It's starting to look awfully bad, right? Especially with the lockdowns in Shanghai, the people are saying like they're starving. Hey, that sounds like a deflationary pressure. But the supply disruptions and the higher oil prices and all this sort of thing, that is inflationary. So are we in a situation where a recession is imminent, but the Federal Reserve cannot begin to ease off on rate hikes? It may be. if all of those things are inflationary, then they could say, well, we have to create a recession in order to tame inflation, even if there's a recession on the horizon. In the end, that would, a real recession would be deflationary. But I don't know. When I think about it, I'm really uncertain about where it's going to go from there. Okay. Now, in other news, Elon Musk has notified the Twitter board that he will not be joining them on the board. But over the weekend, he was kind of taunting them. So I'm kind of thinking, well, this morning, Twitter is down pretty big, pre-market. I think he's going to buy more. I think he's going to buy more. Baird cuts NVIDIA to neutral. That's also pertinent to my interests. Hey, could we actually get video cards for reasonable prices? That would be just lovely. So, that's basically what we got going on here. Did Elon Musk tweet something? No, I don't think so. Hank PDS. Let me break this down for you. Elon became the largest shareholder for free speech. Elon was told to play nice and not speak freely. Yeah. Musk posted a single emoji after the Twitter CEO's revelation, a smiling face with a hand over its mouth. The tweet was deleted hours later without explanation. Man, that's a pretty good run there that we've just kind of sat by and watched. But I'm not so sure that I want to take a really strong position on where treasuries are going to go here just quite yet. They look awfully volatile, and it's entirely possible they could flip around here. It's also entirely possible that they bust through back up to 120. Isn't it crazy that we're at 120? Because when I left, we were like 125 or something like that. Like this market. Yeah, when we left, it wasn't 125. We were around 123. I remember when we were at 125 though. Fun, good times. You remember that? Oh yeah, I remember that. Looks like everybody's finding the stream again okay. That makes me happy. When you take a break like that, kind of that's like the first thing on my mind is like, oh, am I gonna destroy the stream? Because like I don't know, like I could probably be okay not streaming anymore. After having taken a week off, I was like, yeah, if I didn't have to stream anymore, I guess I'd be okay. But I miss you guys, and I feel like I would be doing you guys a disservice if I stopped streaming. I think that I benefit a lot from it though. So we're gonna keep trying to push this as long as we can. So there's some volume going both ways here at 27.26.5. That is something that could create a hole, although I wouldn't discount the possibility of another little push further and then a return back to 27. But that's an area of interest. I'm just gonna mark it there. Also, I'm gonna check my air conditioning. The heater's not on or anything, but I'm feeling hot. I think that it's too exciting. That's what it is. Well, 2 ticks down there from 26.5. What do you think? Is 2.75, well, we're above 2.75 interest rate, too high? Oh man, it's been a while since I've looked at it, but the yield curve was. Guess the yield curve is flattened back out, huh? Or steepened back out, rather. Man, those 10s and 30s are awfully close to each other, though, aren't they? Whew. And the five is still inverted with the 10. Hmm. Very interesting. I read so remember this one because I forget who it was, but there was one bank was basically saying, yeah, we don't think that the yield curve really gives people the sign that we think that they think it does in the past. And they listed all of these factors that were keeping the longer end yields um, you know, as low as they are. Basically, like there's just a lot more demand out in the longer end of the curve because of the current economic circumstances that is highly unusual. It doesn't really reflect the underlying economic conditions as much, right? And so they were saying that like yield curve inversion still matters, but you shouldn't be using 0 as your signal line anymore. You should be using, and they said if the yield curve inverts 75 basis points, is what they said. Can you imagine? Wait, can you imagine the 10-year is at like 2.75 and the 2-year is at 2? Like that would be crazy, 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 crazy. But that also, when you kind of think about that, it's like, well, if we're at those points right now, okay, let's say that the 10-year stayed where it was and the 2-year continued to go up. That would put the 2-year at 3.5, which is way higher from where it is right now, right? That's like a whole point. That's like a whole percentage point higher than it is now. Kind of makes you think, right? Like this move in treasuries, it seems like this is awfully fast and it's got a mean revert and all of these sorts of things. But then when you look at the longer term picture, like this might only be half of it. Like this might only be half of it. Especially like if lockdowns in Shanghai subside, let's think about all the things that would have to happen for everything to be hunky dory. Well, the lockdowns in Shanghai could subside. Maybe this week they say, okay, you can go out again. I don't know. The problem is the Chinese healthcare system like could not handle a real surge in COVID cases. Okay, like that's a real problem for them. But I don't know if they can avoid it anymore. And at some point, they're going to have to do what all of the Western countries said and be like, well, we can't stay locked down forever. That doesn't work. Right. So that could subside. And then Russia, Ukraine, maybe they make a peace deal. I mean, so I was hearing some stuff over the night. Okay. They're trying to make another little push. So when we saw that volume at 27 half, actually it was 26 half, wasn't it? I said, hey, I wouldn't discount it trying to push further. It didn't do that. It did the more conventional. I'm not going to say more conventional because it's very, very common. When you look there in the treasuries, they try and make another push, right? But they kind of did I say more conventional because that's just like what I would expect to happen when there's a liquidity hole there, right? They fell back a little bit. They're back to 27 half. There's still some bullishness in here. So in this particular situation, you're going to see a lot of speculators trying to get in off of that pullback, right? So we can't really make an assumption about whether there is a continuation of the meta order or not. And in this situation, since I feel like I'm a little bit, haven't been watching for a few days, so I'm not too sure I can make a really solid call about whether we'll make a meaningful move higher or not. But the yields do seem to be pushing back here in a meaningful way. Another thing that we got to keep in mind is that this 28 up here is kind of like overnight resistance. So, yeah, it's going to be harder for them to push through 28. Well, we shouldn't. I shouldn't read that as resistance. We should just be watching it there and seeing if resistance shows up there again, right? But they may blow through it. In fact, now that it's like the active hours, they could totally blow through that. But then we'd have, if they blow through that, we really want to watch and see what the volume does after that. So I think that this is a situation here where we might have a better trade if we wait a little bit, right? Is it true that Shanghai citizens are starving during the lockdown? I mean, I don't really know. I guess I shouldn't state that as fact, but there was certainly people complaining about it out on the internet and videos and so forth. I don't know. Like it's not something very sustainable. We know that, right? Because we've been through that. And China doing like full on lockdown and having the virus not go through their country at all was kind of not such a good idea in the long run, was it? Because now the rest of the world has developed the immunity and China has not. And so now China, I mean, economically for China, this would be a really, really bad thing, right? Like China kind of built, how do I put this? I don't know if it's so much that China built their trade better or if it was that the United States trade just like completely collapsed. But US exports just like plummeted, right? And so in the end, remember we had this whole argument about, well, if China put the virus out on purpose, that doesn't really make very much sense because why would they be hurting themselves? And it's like primarily hurting them right now. But in the end, it kind of benefited them, didn't it? In the end, it benefited them. Could they have predicted that? I don't know. I'm awfully skeptical, but probably beyond my expertise. But now we're kind of looking back, and it's not over yet, and we're getting lockdowns in Shanghai. Does that hurt China? And in the end, hurt some more than what they gained over the last 2 years? Maybe. So they've been able to tick above 28. I wouldn't say that there was terribly high amount of volume. I mean, 3,000 is traded at 28. 7,000 is traded at 27.5. So that is not the resistance that you'd be expecting, that the chartists would be expecting, right? Well, usually, I think you're right on that. Engineered in China with NIH. Well, I'm not. Let's not say I think you're right. I don't know how I feel about that one at the moment right now. Like, what if the virus just evolved naturally and then was transmitted to people through like a bat or a pangolin or something like that? That seems like a reasonable theory, right? I don't know. It is, you know what I think it is? When the pandemic happened, all mention that, hey, maybe it escaped from the Wuhan lab, like got immediately squashed, right? I think that China has a pretty powerful influence in the media. I really think that that's what it was. China has a bigger influence than people realize, and that's what they were trying to smash. So I don't know if I can say if I know that it was engineered in China or not. But if that was the case, then you're correct that it was engineered in China with NIH funding, but the release was an accident. Now the NIH would disagree with that, but I think that it's pretty clear that they were funding operations over there. So they'll try and argue about definitions of things, but I think we all know what the reality is. Yeah. Falls back down again. Okay, so that's interesting. But that doesn't look to me like resistance so much as it is that the buying impulse is just petered out. So I think that if we're looking from a meta order perspective and we're looking for like a continuation of the meta order, I think that probably we want to wait a good 30 minutes or so. And maybe, well, let's see if liquidity, if they start throwing the orders into this hole that they've formed, right? That's, I think, where we want to be paying attention to. Well, I have some food here. I'm gonna eat a little bit here. I don't know. What do you think? But the real question is, how far is this going to go in China? Do you think it's going to get worse in China? That seems like a big wild card right now. What am I eating? Trash. Chocolate muffin. Chocolate muffin is trash. I feel bad. I should eat better. Oh well. It's one of those big Costco muffins. You are living the life. I know, right? It reminds me of during the pandemic, and it was like, let's light a roll of toilet paper on fire because toilet paper is rare all of a sudden. Yep. Dude, on vacation. I mean, at points I was living the life on vacation, but it never really went all the way there. So for starters, oh my god, wait, I don't think I'm gonna eat this whole muffin, so I'm gonna go put the other half back, and the baby will eat it. Okay. They were waiting for me to step away, and they're like, "Ah, Seth's gone. We can punch it." Hmm. I do have to say I found the whole man. So it's something that I see in markets over and over and over and over again. Is like, we'll have a big question, right? And it seems like this question is the only thing that matters to markets anymore, right? And then by the time the question gets answered, it doesn't matter anymore because something else bigger has come up. Have you noticed that? It happens so often. It's really wild to think how concerned we were about the trade war with China when Trump was in office. And then, they kind of made a deal. And then it was only a month or two later, the whole pandemic thing started. And it was just like, whoa, wait, what? Completely flipped the world on its head. And then here again, while we've been saying interest rates were going to rise, market was really behind on that one. But I think it makes sense because, uh, there's lots of reasons that people have to come in and buy bonds and at the end of the year and things like that. And so when it happened, I think made a lot of sense, right? And then it was like, yep, we were right. And we just kind of stuck to our guns about what we know about the treasuries and how they tend to work. And it kind of worked out, right? Should have been more aggressive on it because I missed some of the bigger moves. Anyways, I digress. Is just like, and then the Ukraine thing comes along. So, like, the Ukraine thing, we're all focused on the Ukraine thing. And now I'm kind of starting to think, oh, is it like round 2 of coronavirus, comes and supersedes all of that? So it's kind of starting to look like that could happen. It's kind of starting to look like that could happen, don't you think? Okay, so anyways, vacation. So I man, first of all, I don't really want to go into it because I'm still traumatized from it, but like getting there was hell. Oh my gosh. It was one of the worst experiences of my life. Didn't because we fly on standby and I wasn't able to get on my flight. On, well, I was able to get onto some flights, but basically I got stranded in Austin, Texas. We're trying to get to Tulsa, right? So then I had to spend the night, and then the next day we were able to fly, but it basically took all day to get there. So it was like 2 full days of in the airport was just awful, right? But I got my book, STC. Well, I told you guys about it, but the Securities Trading Corporation sent me my Series 65 study materials shortly before I went out. And so I read that on the airplane and I was able to read the whole book while I was on vacation. And didn't go through the cards. I should have done that while I was out there too. Probably could have done that, but so maybe I'm a little behind where I should be. But I think we're okay. I probably have a month or 2 to study for it. Anyways, I can schedule the test whenever I want, right? And we'll be having a baby in June, right? So you believe that? That's only a month and a half away. Month and a half away. Hopefully that month and a half away, though, will afford us some opportunities to record more videos. I didn't write as much on the video front as I would have liked, but I think that the next one that we're going to do is we're going to redo the Introduction to Futures Trading video. So that's exciting, I think. I feel like we just don't do a good enough job educating the newbies. I saw this thread on Futures IO the other day. We're having this. Well, it's not an argument, but I think it's a really good thread. Not because like anybody said anything in there that was like particularly elucidating or anything like that, but it's just like it's a conversation that the community needs to have, and I think has been avoiding. Right? That there are a lot of people out there that have been trading for 5-10 years and they're not making money from doing it. And probably the number of people that are doing that is much higher than you'd think. Probably the majority of the people that have been trading that long in the futures trading space are losing money from it. And why is that? And so on and so forth. And there's some very real reasons why that is the case, right? That a lot of the time we don't want to acknowledge. Anyways, so I want to do the reintroduction to futures trading video, make it a little bit simpler. Just be like, this is how you get going with the software that I use, make your first trade, and this is how you get started trading. And then, there's going to be links to all of the other videos, right? The gateway drug video. Another baby, how many are planned? Oh, well, this one wasn't exactly planned. We were kind of like, if another one happens, it's okay, but like we weren't like actively trying to stop it either. Pretty sure after this one that we're definitely done. But we'll see how my wife, she's like 37 now, right? So we're getting to the point where there's concerns. So about the having a stillborn baby or things like that. So we won't have any more. Plus plus the current baby. He's really a toddler now. I mean, he's 2 years old basically. He is such a burden, man. I don't know what I don't want to use the word burden, but like that's really what it is like you have to watch him 24/7 because he will just get into everything. He will just get into everything. It's crazy. You know what? I'm just noticing here my camera is not quite. That's a little bit better. That's still not right. What's so I'm doing 60p. I'm not sure. Terrible's 2 exploring his world. Yeah, well, I think that he is probably ADHD. Like he's probably severely ADHD slash autistic. Like like we say he's not autistic because he doesn't display like the telltale signs of autism. Like he's much more social than that. But like he doesn't seem to understand what you're telling him all the time. He doesn't seem to interpret everything that's going on correctly. I think that he is probably like a year behind or something. How's Bitcoin? Oh man, it's been quite a while, Jake Hudson. You haven't like, well, I was gone all last week. Well, Bitcoin's not looking so hot today. Um, you can get me distracted, but I all I have to say about Bitcoin right now is that there's still certainly a lot of tether printing going on. It tends to be following correlations with the S&P 500 really strictly. If there is a recession, could be really crazy how Bitcoin reacts, but we'll see. So, anyways, with the child, the gist of it is that he will destroy and get into everything if you don't watch him, and so we literally can't do anything. And then we're gonna have another one, and I hope that the other one isn't as bad. But man, so yeah, there's not gonna be any more babies. And it was like the same thing. Well, while I was on vacation, most of my about half of the time was my wife um, complaining to me that I need to watch the baby for her. So neither of us really got too much done on the vacation. But actually, I got a lot done because I still would wake up early, and before everybody woke up, I'd do my studying, and I read that whole book. I know a whole lot about investment. In investing advisory representative. That's the test that you're taking. I don't know if I'm ever going to do anything with it, but it sure makes me, I'm kind of sitting here like after going through this course, I'm kind of like, there should be more requirements for people. Like there should be, a certified retail market maker, you know, certification or something, like maybe they don't let you trade futures unless you've done the certified market maker, or if you do that, maybe you're exempt from the wash trading rules under certain circumstances, something like that. Like it just like it seems like there's a lot of education. Now, most of this stuff I knew. In fact, the vast majority of this stuff I knew, and it's for me, it's really going to come down to like memorizing things because you have to memorize like, okay, this kind of transaction is exempt, but it has to be as long as it's within $50,000 increments and all of these other things, or like when you file, how many days do you have to wait, cool off period, like those sorts of things are on the test. I have to memorize all that, right? Um, but I learned I don't know where I knew all this stuff, just from reading stuff. Uh, Maybe the training that I got when I worked for the bank. Anyways, I knew most of it, but it was still I really enjoyed doing it. I'm really excited to take a test. I'm probably going to take it easy. Um, go through these flashcards that they have online and start taking practice tests. And so I might not take it for a few months, but yes, I got that stuff done, but most of the time, no, not rest. It was like having to follow the baby around out back so that he doesn't drown or get killed by the rooster. Man, this rooster had a rooster, and he decided that after a while he decided he didn't like me, so he decided to come for me, and I kicked him in the head, and that bird did not mess with me after that. I think he decided he was beat. So So the gist of it is, I was hoping that I was gonna live the life, quote unquote, during the vacation. That did not occur. Probably could have studied 3 times as much as I did, but I still got a lot of study done. I also could have written. I wish that I had more time to write. You know what? Sometimes when I go to write, I can sit down and write for like an hour or 2 and not have and only have written a paragraph. It's really insane when I think back about it, about how much effort goes into a single video. It's a lot. Even if I was doing it full time, it would be difficult for me to get like 2 videos out a week. Honey, put that nerd book down and grab another shot. It is a nerd book. You know, my wife, she's a flight attendant, right? And I have to say, I'm not a huge fan of how the airline industry functions or takes care of its employees. I really don't, especially the flight attendants. You know, a flight attendant used to be a prestigious job, but it's not. Like if you're working for one of the local airlines, uh, and you're brand new, you're like making poverty wages, and and then the people that have been working for a while, they continue to kind of get the shaft. So I think that if it wasn't like the thing is that she has a very flexible work schedule because of that. So that works really well with trading the kids back and forth, and of course having babies and everything. She can still work, and we have the babies. Otherwise, it wouldn't work, right? Or we'd have to pay for a nanny, and basically everything that she makes would go to paying the nanny, right? So she's kind of looking around. And I don't know, because that's the other problem that if you go into if you really dedicate yourself to the flight attendant industry, as you come out, you don't really have very good, like, transferable skills, you know? Where you go, I mean, anything hospitality, but, there's not like offboarding jump into some like for me, see, I really want to get into machine learning. So I guess that's still computer science, but it's kind of a separate track, right? Because I've kind of been on the developer track and I moved over to the uh, site reliability engineering track. And now I'm thinking if I can move over to the machine learning track, I'd like to move over to that, right? So for me, there's lots of flexibility, and any of those jobs could be, I could potentially make 150, 200,000 depending on where I was living and working and so forth, right? But for her, just like not really. So when I got this thing, I was like, well, maybe this could be something that she could do, because that's certainly the case that she could become a investment advisor representative. And there are companies here in Salt Lake that, I mean, Goldman is here and they have their wealth management arm over here. So you could, I don't know if should be able to get into that, but you know, because they're there, like all the other banks are here, and Fidelity has a lot here in Utah apparently now too. So maybe she could go and work for Fidelity. I spoke to a lone flight attendant, had a nice conversation, and she was overall sad that she was away from home Monday through Friday. Yeah, I mean, if you're really working hard, but especially when you've been around as long as she has, you have a large degree of control over your schedule, which is kind of the biggest barrier right now. So we were kind of talking like, well, when we're both on leave, that could be an opportunity for you to study up on something and switch careers. I've never heard of Hillcrest Bank. That could be a time to switch careers. And one of them was like, well, you could go to a code camp, or you could, then I said, hey, I got this thing. You could do it too. Right. Well, after having read through the book and looking at the amount of study it's going to get, I'm going to require to be able to take this test. And I already knew a lot of the material, and I think it's going to be weeks of studying every night for me. I don't know if that's something that she's going to really want to do. And I don't know if it's material that she's going to be really, really interested in. Like she has, I think that there's something like a third of the population are like this, but it's like they will remember a lot of details about something. And it's can be a little frustrating when they're trying to tell you like the plot of a movie or something like that because they go into way too much detail, right? Like she's like that. So for that, I think that that would probably be good, right? But I'm not sure she would be super interested in the material or not. Get an energy job. Programming job would be good because she probably would be able to work from home, but that would be a lot of work too. And probably some investment because even though I could probably teach her here at home and have her go through free courses, I don't know if she would really. I think that she would need to do a code camp. I think that she would need to do a code camp to keep her engaged. What do you think about a code camp that does not charge tuition until one got a job? Sounds great, though. I don't know. Is that a thing? Do people do that? That seems like a viable thing. So there was quite a bit. Remember when let's just walk through what we saw happen here in the Treasury again. So we had a pretty strong move up. Well, I mean, there was a pretty strong move down on the open, but eventually moved up pretty strongly. When we came around to the 27 area, there was a little bit of a hole, and we thought maybe it could continue through, but that tends to be a little spot where they tend to attract, a little bit of gravity. And then they fell back instead and then came back to that point. And, there was that like resistance area at 28, but we said, well, we're not seeing much resistance here, but we are seeing the buyers just like kind of totally peter off, right? But then they did come through. There was still speculators out there that pushed it through. When I look at the volumes and everything, well, there was a lot that traded at 29.5. So that's probably a large portion of the meta order went into that spot, right? But now what I'm seeing is not just what appears to be like post meta order impact per se. Like somebody is definitely coming like smacking this down. Now it's coming more in the 30 year. It's not really coming in the 5 year at all. So this could be like flattening. This could just be flattening behavior. But that we were kind of looking at, hey, we might want to wait for it to back off and then we could maybe buy rates here. Well, that doesn't, or sorry, we could maybe sell rates here. But that is not happening at all. I think that we're getting maybe an opposing meta order. So that kind of leaves me on my toes and quite uncertain about what the next step here is. You're doing a C# Pluralsight course? Oh, yeah. I have to say, like, there's a lot of video content out there to learn things. And I personally don't find that to be the most effective way for me to learn. Like short videos, sure, but like when it's like this big long topic, it doesn't seem to be working for me. Like I did this one on machine learning, and I got about halfway through it and kind of learned the major things that I really wanted to know, and I just kind of didn't do the rest of it. It's because kind of where I've gotten to is I understand enough about what the frameworks are and so on and so forth to kind of get started and like the models, and it's just like you format the data right and pop it into the model and they do all the work for you, right? So I kind of backed off and was like, oh, okay, so now what I really need is I really need more information about what kind of models really work in finance and which ones don't. Because there's a lot of techniques, like I already knew from reading Taleb stuff. Like when they're talking about doing a regression across multiple variables, like normally you do a regression like just like an XY regression, right? But what happens if there's like 100 variables in there, or however many features you're probably a dozen features that we'd be doing it with? Well, the errors that you get off of a regression kind of all multiply themselves when you do it in multiple dimensions. So a multiple dimension regression unlikely to be very effective in a finance application, right? So I kind of stopped. But then I saw yesterday that Nassim Taleb has another technical inserto coming out, or that he's writing, I guess, because he said I need the title and then I have a book. It's like, okay, but his book is basically going to be what kind of models work and what kind of models don't work. So right down our alley. Then the other thing was I took this I got a machine learning book, and that in finance, machine learning and finance book, and that's really good, but there is a lot of probability and there's a lot of math in there that I don't think I understand. And I can't get access to the teacher guide, so I can't see the solutions to the questions that they post in there. So I don't know if I should just plow through with that book and read it all, or go back and do my math book. I read a bit of my math book on the way home and I was actually quite into it. I don't know, but probably for now, the Series 65 is gonna take up more of my dedicated study energy, at least. So, but that doesn't answer the question of what can my wife. You know what she's doing though is she's got like a vinyl printer, and she's like printing on mugs now. So maybe she'll just start her own business. I've seen a lot of people online doing things like that and making tons of money from it. So we'll see. While this 26.5 area seems to be a spot of some sort, looking across the board, we still got 15 minutes to the open. S&P 500 is headed on the way up for now. We do have Fed speakers, so let me come in here and look at what was the exact times and context of those. Bostic is expected to be speaking, but when is that? All of them, I guess all of them at 7:30. Due to deliver opening remarks at a Fed Listens event in Nashville. Audience questions expected. I see. But it's really Federal Reserve Governor Michelle Bowman that will be the primary speaker. So, yeah, on Etsy, exactly. They've been messing with the mouse market this week. It's rough in the mornings. Yeah. Well, when I was looking at all of the action while I was on vacation, I was like, well, that was some big moves, but I'm not sure if those moves would have necessarily been good for me, because I mean the best I can do is come out here and say, Fed speakers have been aggressive. It's best for me to go long interest rates, like that's really like all it comes down to. Or you can try and be fast, but like those are all moves that aren't particularly well suited to us, are they? So I don't know what you do. This kind of comes back to this thing that's like, well, trying to swing it makes a lot more sense. By the way, natural gas just seems to be like taking off here. I don't know what's going on over there, but there is definitely something going on over there. There's definitely something going on in natural gas. I'm not really seeing it super strong in oil, but oil is on the move. They briefly bottomed out at 93 and now they're approaching 95. So still insane amounts of volatility in oil. Man. I mean, it's just the volatility in general. I look back at it. The more I look at it, the more I'm like, like, I'm not sure what we do about volatility. It seems like, when I look at the professional world, they understand that the volatility risk is just a risk, and you basically just have to have everything set up for you to be able to weather the volatility and be okay, right? Because I've always thought of it as like, you trade normally, you make a little bit, and then the volatility time comes, and you've got to play it right. And then if you play it right, you make tons and tons. But the more along this goes, sometimes you get like a really strong trending volatility sort of thing. But that's often not the case. Usually not the case. Usually it tends to be very messy and very difficult to trade from an intraday perspective. So I'm starting to think maybe there's not really a solution to the volatility. Maybe the solution is that you've just got to like really back off and be super cautious and only take the trades that you really have a really good idea of what's going on and can predict, right? Because so that's again like here, some Fed speaker is going to be talking. Are they going to move the market or not? I'm not so sure. It looks like, there was a move that we had that was pretty good that we could have made maybe $20 off of. But that is past. And I did not have any indication that was going to be coming. So probably the best trade is behind us and we can just see what happens. But they could say something. And maybe that would give us reason to act. So we'll have to see. I think at some point there's going to have to be some. I think at some point some of the Fed speakers are going to have to say, well, we would like to raise rates and we're concerned about inflation, but there are some deflationary headwinds in the way as well. And we're perfectly capable of being able to back off because our monetary policy is still quite accommodative, right? I don't know. First Squawk tweets Bitcoin last down 2.4% at 41,115. Ether down 4.8. Ouch. Why were you asking me about Hillcrest Bank, by the way, Uzi? Who's that? I've not heard of them. You know what's something else that we need to get more into is the Elon Musk. So Elon Musk has declined to join the Twitter board. Market has been interpreting that as a negative and Twitter has been down. But for instance, he was talking to Michael Burry. He was tweeting at Michael Burry because Michael Burry said, oh, hey, Elon being in charge of Twitter, that would maybe be a good thing. And then he lost his blue check mark after he tweeted that. And Elon was like, I think you'll get your check mark back. Right? Kind of implying that he was going to be in charge of Twitter and had control over those sorts of things. So was this whole thing that we had this last week about him being on the board and everything, was that all a feint? Like, was it they read the filings? I thought that they must have been talking to each other or something. But now I'm thinking they got the filings. They said, oh, hey, come join the board. Then he looked at what was involved in joining the board and said, oh, no, that's not going to work. I'm just going to have to take over the company. But he didn't tell them until the last second, right? To keep them on their toes. So is Elon been for the past week preparing a takeover bid? And then we have to get into some of the things because not sure if he really has enough stock to completely take it over, or what that would look like. You know, I'm not sure what that would look like, but we might see it. Thing is I haven't seen a modern example since I've been in markets, at least, where there was like a real takeover war of that nature that was like really high profile in public. So I don't really have any experience with it. And it's going to be weird, but maybe we can do some research and try and look at how things went in the 80s and try and sort some things out. I do remember learning a lot about that when I was at the bank, and some of the tactics that they use to take over and try and prevent the takeover and things like that. But hmm, is JP Morgan on Wednesday? It feels like it was just yesterday that we had earnings on. Well, it's every quarter. It's every quarter. I don't know. This kind of feels familiar though with earnings, doesn't it? Like, we're concerned about a slowdown. We're concerned about company earnings, and they might all come in bad, and then the market will really come down to like its true valuation and yada yada yada. And then the earnings all come out, and they tend to surprise on the upside, and everybody's happy about them, right? And this seems like a setup that could be very similar. Could be dead wrong. That's just like gut feeling about it, but I'm not convinced that earnings will be expected. But for the banks, it will be particularly interesting. Supposedly, Goldman Sachs made a ton of money off of trading because they've put a lot of money into the fixed income trading, and apparently the inflation protected bonds have made them a ton of money. So it's going to be interesting to see how much money Goldman Sachs has made off of all this. But then they're also going to have to come in and talk about what they're going to do with the inverted yield curve and so forth, right? So I guess it's a lot better since the yield curve uninverted, but geez, that's a real headwind for banks. You got to understand that the amount of steepness in the curve has a great deal of influence over how profitable banks are, right? Just curious, is a bank up there in Utah? Yeah, I've never heard of them. There's a lot. Yeah, there's so many credit unions in Utah. That's the big thing over here. Mania faded a bit. Yeah, well, you know what's happening there though, right? It is just big individual players YOLOing options away. Like what continues to happen over and over there in the meme space is you get sucked into their own kind of impact created bubble. And of course, there's always this possibility that like the larger public picks up on it and everything and gets involved. But with the AMC one, we totally called it, right? We totally called it that it was going to be, there probably isn't going to be anything to really continue it on. It's always a possibility, but probably the larger public doesn't get involved and the whole AMC thing fades. Are we long or short bias today? I'm not sure. At the moment, I'm kind of hands off because we got Fed speakers coming up, right? It does seem to me that the larger trend is higher in the treasuries. In the S&P 500, it's a little harder to call. So if we come back over here, like if we just kind of look at what we've been doing overnight with kind of a little bit of a higher time frame look, right? When you really zoom in here, okay, like we're definitely higher. This Friday was a pretty uneven distribution, right? So point of control, basically right at the close, big sell into the close, right? But the overall distribution, it's pretty random, right? So a very disorganized distribution. Yes, Friday in S&P, and the volume here in the S&P 500 in the overnight session, mostly at the lows. So I think that there's a big risk of the S&P 500. Well, I think it's almost certain that they're going to try and make a push below 4444, right? That's almost a given. No way you get that close and not at least try to make it, right? But from there, then what? Tons of volume and it reverses? Or does this just turn into down, 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 down? Or do they really pull it out and it's just up? Like I'm not sure that I have a piece of information to tell me. The other thing is that we're kind of mid-month. So like remember, we've got CPI, right? When is that? That's let me change this. CPI is tomorrow. That's right. Tomorrow we've got CPI and a 10-year auction. And then on Wednesday, we've got PPI and the 30-year auction. And then on Thursday, we've got core retail sales. And then Friday, we've got Empire State Manufacturing Index, right? So we're at the data heavy portion of the month. And this is unusual because normally a lot of that stuff is more like the first 2 weeks. But because the first was on a Friday and everything, you kind of get this weird thing where last week was kind of light and this week it's really heavy. And then I think next week, let me come in here. Building permits, home sales, Philly Fed, flash manufacturing. Okay, so next week isn't too bad. And then after that, GDP. So, and we don't have any of those like big factors like the end of month rebalancing, gamma, this sort of a thing. I don't have any kind of indicators of that sort really giving me a solid reason to think that they're going to go one way or the other. Okay, well, on the open, there was quite a bit of selling, but the action favored the longs. Spent the last few weeks experiment with footprints and imbalance. So what do you term as an imbalance? That at a certain price that more traded on this side than on this side? Because that's something that I've kind of back tested with mixed results before. Like that's something that like during certain periods seems to work really, really well, but then all of a sudden like stops working. FDH says yes. Yeah, I don't know what to tell you. I think that a lot of these things are like there really is something to it, but there's a much more complicated system going on underneath than at least my simple mind can sort out in a strategy, because I just want to look at it and say, okay, if there's an imbalance of more than 3-to-1 or 4-to-1 or something like that, then I want to try and trade that imbalance for X ticks and whatever, and it will it'll have really good periods and it'll have like really ugly drawdowns. Although, one of the things though was that with that, when I was testing that, I was using more like range bars, and there's some problems with range bars. They only work at key. Yeah, okay. So then if they only work at key areas, then the problem that you're going to run into is that you're not going to really have enough samples to really get a statistically meaningful result, especially since it's something that requires order flow and may not be accurate. I'm not really unsure about how accurate tick replay is, because whenever I use tick replay, I use 1,000 tick. So well, that right there is already a problem, dude. So here's the problem if you're doing like 1,000 tick. You could have periods in the market where there's way more than 1,000 ticks in a second, right? And those tend to be the places where you're going to see that imbalance, and your algorithm is going to want to try and trade, and it's not going to be able to do it fast enough, essentially. So when you use bars that are not based on time, what I have found is that it will tend to bias you towards trades that you're never going to get filled on. you're never going to catch. You're not going to catch the price that the simulator says, at least. If you were to look at the chart and not the DOM, where do you think the weaker traders? Well, I don't think that you really get enough data from the market to really make a strong conclusion on that sort of a thing. So like, I think that you're kind of taking it from like, okay, here we have this set up here. There's this overnight range. Who's weaker, the longs holding on down here at the bottom or the shorts holding up here at the top? And well, since the tendency has been down, we're going to see probably the buyers are weaker and they'll be able to push down through them more easily, right? But this is not how markets work in my experience. In my experience, sure, there's a range. Okay. Anytime that I see a range, so here's how I approach it. If I see a range, that probably means that there is some sort of strong correlation keeping this in that area, right? Like I see it as, okay, when the markets aren't moving very strongly, the correlations are more dominant. And then when the markets are trending, it's because of large meta orders, right? So when you approach it from that perspective, are you more likely to see the large meta orders push down or push up? And the reality is we don't know. At least we can't know from the chart. There's not enough information on the chart to know that because it's all going to be down to future orders. And for all we know, somebody could come in and decide to buy it up for no reason at all because they were bored. Because they were bored, they decided they're going to move. That can happen, right? But it's more likely to be like they want to move it up because they're rebalancing, or there's something to do with their fund where they have to do that, right? And so I really want to have a reason to think that they're going to move, that there's a reason to think that a meta order is going to come and push us in a certain direction. And if I don't have that, then you really don't have a positive expectancy. You really don't have a reason to trade. And although I'm sure that there are definitely reasons to do that, I've kind of been on vacation a little bit, so I might have missed some things, but I don't see anything from the gamma or, like the market internals that suggests to me a really strong direction one way or the other. Here on the open, I just want to point out that the volume has been the market volume pretty much has been a sell, but they've been holding it. So the futures order flow, at least, seems to be suggesting that there are passive buyers out there holding prices really well, right? You want to try and, well, let's try and like on the breakout, maybe try and catch the momentum. But this is not a trade that I would normally do on my live account because I'm just trying to run with the momentum, right? Well, they are already messing with us. Yeah, you can get filled with limit orders, but market orders work. Yeah, but then the issue is that the market order, that the price that your market order would actually get would probably be several ticks higher than what the simulator says. So you would really, I would say that you should factor in, like on the S&P 500, like at least 4 ticks of slippage into your back test, right? I don't know. But like I said, any time that I've tried testing that sort of a thing, I see something that kind of suggests that there is something to it, but it's not very consistent. It's not it's not something that would work for you over 5 years. It's not something that would work for you more than 3 months, frankly. Like it changes and there's a deeper system there that I can't sort out, right? So, I don't know. Now, If you were just going off of imbalances and you were taking like a really short-term trade, but how when you say you tested it, like in your back tests, how much data did you use? It's kind of the question. Friday being a holiday, options expire on Thursday. Oh, is that the case? Wait a second. 1, 2, 3. Oh, really? That's very unusual for the options to expire that early in the month. But you're right. You don't back test. Well, then I don't know what to tell you. Just because it's been working over the time period that you forward tested it, I wouldn't throw all my money into it. You know. Well, I tried to go with the momentum. Did not work at all. Still, I mean, it was kind of a just a messing around trade, but I think that on this one, I'm gonna go flat here and try again. I haven't heard anything out of my news squawk about the Fed speakers yet. Update available for my pen. Okay. Well, we'll try this again. This time on the break of the lows, but they might pull the same problem on us, right? So let's see. Well, this volume seems to be continuing to come in short. Like there was definitely some passive buyers in the beginning, but they're just starting to get overwhelmed by the market orders, huh? Are we seeing what else is moving out there? GE is moving, huh? That's interesting. Euro dollars. And that is not one that I've ever seen at the top. And ES, of course. Oil seems to be getting hammered. That start with the ES open, yeah. When the S&P 500 opened, oil started to get hammered as well. Same with some of these other commodities, soybeans. Just about the only thing on my board that's really doing well today is silver and the 10-year. I mean, the yields are all positive, but well, I came right back to my entry. Oh, I didn't know that Taleb has a medium. Oh, but this thing that he wrote was like years ago. I tell you, like one of the things that's been going through my head a lot lately, and I think about Taleb a lot. I really would like to meet these people. I don't know what I got to do to meet these people and make some relationships with them, because what I see when I look back at market history, oh man, see, that's just I think I'll puke if they get above the open, but that doesn't look too good, right? Just testing both sides of the range, and neither of them broke out, so that kind of sucks. But we knew we were doing something that's kind of like fat-tailed and tends not to work. So, anyways, I got distracted. When I look back at the market history, what I see is that when you see people that have done really well in markets, traders that have done really well in markets, Treasury is moving back up to highs again here. Maybe it was the right call to have tried to go short rates back when it was like at 775. When I look back at the history, especially the history of the CME, what I see is like whenever you see somebody that was really successful, it was either from doing a new thing when the market was getting completely shaken up, or it was during a market mania, right? And they got lucky during a market mania. So in the beginning, like in the 80s, there was the locals, and there was some locals that made a lot of money, but then like the locals that did well, they really established themselves, and it was really difficult to make any money and come in. And then came along the electronic trading, and Anthony Crudelli was probably the most prominent person during that time. He came in and he was the king of the electronic trading. And then the robots came along and some other guys came along and basically took that from him, right? And it's just been one thing after another. And we've seen more recently, we've seen machine learning algorithms take over, things like that. But when I think about every time that there's like a shakeup, what has been the nature of that shakeup? The nature of that shakeup has been technology wise. It's always been technology and the computers coming in and new innovations there pushing things, right? So what is really happening in the future space then? There's a lot of retail traders chasing things that the old way of doing things and are really missing out on the true innovative opportunities that are out there, because the opportunities are like machine learning, agent-based economic models, right? Like really complicated stuff that you really have to be like an expert in your field to be doing really well with, you know? And there are so many people in these spaces that are just like, people don't realize that Nassim Taleb is somebody that they will be talking about in economics hundreds of years from now. Like, dead serious. Jean-Philippe Bouchot, 100%. These guys are like totally pushing our understanding of markets in ways that have never happened before. The last 20, 30 years of science in the computer engineering world of finance is just absolutely groundbreaking. And the majority of retail traders don't know a thing about it. They're completely missing the train. I was not a quant at Goldman. I worked on the trading infrastructure. Would never have known what was happening at that world. Yeah, but did you kind of hear how when I was walking through it, like how I was able to explain how, at least for the treasury, that how the support level didn't really matter, right? Because what matters? Future orders. What predicts future orders? Does support and resistance predict future orders? From what we know about markets, no. From what we know about markets are very inelastic. So support and resistance is not very likely to move. That's why I say when you see something that appears to be really heavily defined as support and resistance, it's probably because nothing's actually happening and it's just a correlation. Excuse me. This is just what the science that I have says. So, I don't know. I'm looking at myself here in the camera, trying to sort out why this seems different. Ah, there we go. I can go to F4. Now it's perfect. Okay, so They came back off of those lows. They made an attempt at heading lower, but have kind of returned back to this area. So I'm thinking both of those breakouts for the time being have failed. I'm not entirely sure what's going to happen. The Treasury made another move higher there. So we are getting some activity in the Treasury that is supportive of the idea that there is still a large meta order executing along. But you're getting decent enough pullbacks and pushes on the other side that there certainly must be two sides to this market. That means that I probably don't want to buy right there at the highs, right? Yeah, the volume is all accumulating like right around the open for now. Well, I think that the S&P 500 probably is going to move eventually. I think it's not going to hold this range for very long, but I'm not sure that I can really predict which side of it it's going to hold or not. I think I'm more interested in the short side at the moment just because the deltas have been negative. But it's not enough that I would be like, I'm trying to base a trade purely on that. I think is a little, well, we're going to try it anyways. Oh, okay. Because I do know if this turns out to be a sell day, that it could get I mean, because to open at last week's lows and then just bust through those, that could really be a significant move. That might mean that it's less likely to happen, but I don't know. Well, that's not too good of an entry, is it? Nope. Well, now you know why I haven't really been trading e-minis with my live account, right? Uh, yeah, I mean, it might still turn out to be a good trade, but I just didn't really like that entry. So, anyways, as I was musing a little earlier, so if the retail traders are largely missing the boat on these huge game changing developments that we're having in finance, how do we help them there? I mean, I haven't necessarily benefited from it either, though. Like, that's the thing. It's like super hard to get involved. You need the resources really to get involved in it, huh? Maybe it's the case that is just not really practical for retail traders to really make money from it. I don't know. Well, there was a bit of a sell there, but they're starting to trade a little bit more volume in the 48 area. We do need to get into the machine learning though, right? Because like we might be able to use some of these places where we found something that like it seems like there's something to it, and based on what we know about order flow, there maybe should be a reason why it would behave that way, but it doesn't seem to be very consistent, or the drawdowns are really bad, or whatever the deal is, right? The hope is that utilizing machine learning could help us sort out the more complicated systems working on underneath of the hood to make those sorts of trades more consistent. But I don't really know if it'll actually work. We're just kind of venturing off into the unknown, aren't we? I just have to say, like, the thing that I'm just getting, the reason I'm thinking about it is just that, like, this is the same trap that every new person comes into, even myself, right? So yeah, okay, well, I'm gonna go and try this, I'm gonna try this, I'm gonna try this. And a lot of the time you think, oh, this works, like this is the thing, and so you start trading it, and then as you start trading it, it stops working, right? And what is the problem? The problem is the amount of data to really verify that there's really something to it is a lot higher than you expect, and often higher than the amount of data that you actually have. Especially with order flow, you don't have 5 years worth of order flow data. You just don't. They don't give it to you. So what do you do? There's nothing you can do. Well, I've seen excursions both ways in the ES, but they're still just kind of stuck there around the regular session point of control so far. And the treasuries did back off with our highs and came back to kind of the area that they had been building their volume as well. Gold has reversed and has lost about $20, which is very interesting to me. 1956 at the moment, so I'm not sure what's going on there. The dollar, did that coincide with a change in the dollar? That did. When the dollar turned back down, gold stopped moving. Something's going on there, but I'm not sure what. What about copper? What's copper doing here? Copper's moving lower still. And Bitcoin is moving lower still. So macro complex presenting an interesting picture, but not really giving us very many hints here about which way this is going to bust through. The volume since that first really big push down on the open has been largely sideways. Forbes tweets Russian President Vladimir Putin might use the United States' support for Ukraine's resistance to Russia's invasion to meddle in another U.S. election, U.S. intelligence officials have concluded. Yeah? Do you think that we will see Republican candidates like kind of soft supporting Russia? I think that that's a possibility that could be really bad for the Republican Party. Except for by that point, Republicans will probably be more in charge of things too. So, let me tell you what, guys, the 2024 election is going to be awfully interesting. Treasury's falling back down there again. So you see what I mean? It seems like that this buy meta order is never really backed off per se, but there's definitely been pushes the other way. Like somebody's selling it. I think some of that is part of a spread trade. But the interesting thing about that is that even though they've been trying to steepen the curve or trying to flatten the curve, it looks like the curve has been getting steeper. Right? The 30 has not risen as much as the 5 and the 10. I think you'll see Republicans opposing a proxy war and being labeled as Putin sympathizers by the media to drum up that, yeah, 100%. Well, like, the thing is it's an easy trap, right? Like, how hard is it to just say Russia shouldn't be doing this? You know? Russia shouldn't be doing this, and I think that our support of Ukraine is appropriate. And I don't think you really have to go into it deeper than that. But you know that they're not going to do that. They're going to say, "Oh, like we're just getting involved in more wars, and what is it our business what Putin does?" And that's right. There's going to be at least one of them that does that, right? And then that one person can be used to paint the whole party. But at the same time, I see a lot of Republicans kind of doing that anyways. Like, it seems like there is a major contingent of the Republican Party that kind of soft supports Russia, even in spite of what they've done and how horrific it's ending up being. Oh, man. That whole thing, I've been reading a lot about like the atrocities that have been happening in Ukraine. I don't think that it's anything that's like from the top down, but like it's like their military culture is basically like they commit war crimes. Like that's like the military culture. Like it's all against the rules and they're not supposed to do it, but everybody does it anyways. That's so like, yeah, because Ukraine is so important, we should hurl infinite resources at them all. Yeah, I think it is though. To be honest with you, I think it is. Like, just think for a moment. If the United States were to all of a sudden just say, okay, Ukraine, sorry, but it's not our problem anymore. And then allowed Russia, sat by and watched as Russia just swept over all of Ukraine. Okay. Like, now that they've got involved in an entrenched war and the West has already started to support them, that alone has kind of changed the situation, right? Because they did hold off the initial assault and the Russians have had to break off the assault of Kiev in particular, right? So to abandon them now at this point would send a really bad message to the world. And it would send a really bad message to bad actors too, because the message to bad actors is the West really doesn't have the fortitude to stop anybody from doing anything if they choose to do it, as long as they're not directly attacking the West. Which means, yeah, Russia can take over all of Ukraine. Russia could potentially take over of other NATO country, or maybe not other NATO countries, but Russia will continue to expand its influence and take over different areas, and maybe they even would attack a NATO country. It's possible, right? And what does that send? What message does that send to China? Because right now the message being sent to China is, yeah, maybe invading Taiwan isn't such a good idea because that's going to be a protracted war that's not going to be good for you. But if we abandon them, then all of a sudden it's like, yeah, we'll probably abandon Taiwan too. So I think that there is enough at stake in terms of the geopolitical order of the world to justify continuing to put resources in it. Yes. I don't think when I look at kind of like the libertarian kind of side of things on wars, I see a lot of strategic blunders, like I think that if Ron Paul had ever become president, that everybody would turn on Ron Paul's worldview of things very quickly if there was any kind of conflict. Right? Like when it was Donald Trump, Donald Trump was kind of more like, carry a big stick. Right? He didn't want to get involved in any wars and he did everything to avoid getting involved in a war, but he carried a big stick. Like nobody wanted to start anything too big. Right? But you get somebody like Ron Paul in there, then it's like, oh yeah, absolutely. I'm going to go and take over everything that I always wanted to now. Because the United States is not going to do anything about it. Yeah, that wouldn't end very well. All market makers are busy buying cheap alt gamma on DOV auctions. How do they hedge? Selling Bitcoin at volatility. That's why it's so compressed. Bitcoin volatility at historic lows. It is true. It's quite not volatile in Bitcoin as of late. The FBI now hiring computer scientists nationwide. Relentless, insightful, and hey, that actually does sound like me. Maybe I should try and work for the FBI. I don't know. Would if I worked for the FBI, would I be allowed to stream anymore? Would you guys trust me if I worked for the FBI? I don't know. Kind of sounds like they're just doing general recruitment. They have all of these like grade levels, and I don't know where I fit in those levels. So they don't really make a big deal out of that stuff at my company. Every once in a while, they'll be like, okay, we need to like get you guys to level up so you can make more money and yada, 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 yada. And then like nothing happens. So they're kind of teasing that 444 area again. You think they will have a breakdown now? We're not seeing like a change in the cumulative delta. Like we've moved lower. That's probably more like correlation with the index and everything. I'm not seeing like people lean into it and selling it yet. We wouldn't have to abandon them if we hadn't been setting them up as a pawn for a proxy war against Russia for 10 years. Well, so what do you think we should have done? You think that we should have just, ignored Ukraine all this time? Let them be a Russian state? I guess. But I tell you what, if that's what we had done, then the argument that we would be having today is, should we defend Latvia? Should we defend Estonia? Should we defend Poland? That's what the argument that we would be having now if we had let them have Ukraine. Why should we let them, frankly, why should we have let them done Chechnya? Why should we have let them done any of these places? Right? Russia is acting like an expansionary imperialist power. Like Hitler did. It's the exact same playbook, man. And if you don't support Ukraine, like we had never supported Ukraine, then it would have been the same. Nothing would change. It just accelerates the timeline, right? I think Putin is more ideologically driven than people realize. I think that's really been my big takeaway from this Ukraine war, is that Putin is more ideologically motivated than we thought. And I think that I get it. Like, I don't think that everybody has come to that conclusion yet. I think there's still a lot of people on the right that are saying, well, it's not that he's ideological or anything. He just is threatened by the West. Okay, like why? Why is it that if an independent country has friendly relations with the West, that's a threat to Russia? That makes no sense at all. That sounds like an excuse to invade in a place that you always thought should have been yours anyways. That has strategic significance to you and you always thought should be yours anyways. That whole block, that's where they want the resources from there. Well, they made a pretty good excursion there. Now they're coming right back up. I mean, I kind of want to keep this short on because it's kind of fun, but I don't think I'm getting much of anything today, am I? Hmm. Oh, that's good. President Biden this morning, I'm meeting virtually with Prime Minister Narendra Modi of India. I look forward to further deepening ties between our governments, economies, and people. You know what? I really like India, and I'm really sad that they've kind of been going along with Russia here, and yeah, I don't know how else to put it. Like, when I worked for the bank, there was so many Indian employees and they shared so much of Indian culture, and I was like, oh, this is a great place. I really hope that they continue to develop and become a strong country because they have all of the right ideas and stuff. At least the people that I had met did. And since that time, India's just gone south, you know? It really makes me sad because India's like, if I was going to invest in a foreign country, I think India is the place. I think India is the place. It's like you have a large number of people and good opportunity for growth, like maybe China, but actually freedom loving people, you know. But it just hasn't been going well. But you know what? I used to think that about Russia too. Not that I thought that Russia was freedom loving people, but just like, oh, it looks like they have an opportunity to really grow. And then Putin got in charge, right? Hmm. God help Ukraine. Yeah, well, unfortunately, no matter how that turns out in Ukraine, it's going to be a big mess, right? Seems like the S&P 500 and the Treasury are trading inverse correlations at the moment. Their swings tend to be happening around the same spot. Gold has pushed down a little bit. They've almost given up almost all of the gains that they've made overnight here. Let's check here on the volume profile. And just verify here. Because there might have been a little bit of an overnight jump. There was a little bit. So 1940 is basically where they were last week. That's a really big decline, though. That's quite odd. And not seeing a huge move in the dollar correlated with that makes me wonder. Indians are no, yeah, they are. The only thing is that the group of Indians that I've interacted with is a very special group of people, right? Should we say, I shouldn't say special group of people, but a lot of them are like the upper class of India, right? I was interacting with the upper class of India, so my impression of the Indian people might not be an accurate representation of the India as a whole. I mean, I had met people from all over the country, and I had met people that were very upper class, and I had met people that were in very lower class provinces and stuff. But those are still like some of the most successful people in their country, and they have the ability to come over to the US and work for a big bank and stuff, right? So it's sickening that we spend over 300 billion for Russian energy, and each NATO nation spends similar, and all we send is 1 billion in help. Well, I don't. So here's the problem, as I understand it, is that the amount of money is not necessarily what's at issue here. What's at issue is the kind of help that they're being given, right? Like, we're giving them enough to survive and to fight back and to cause a problem, but we're not giving them enough to win. And it kind of seems to me that Russia is going to take some territory in some form, right? I don't know. So Zelensky, he's kind of talked about the specific things that they feel like they need and stuff. I think the reality is that he would be overjoyed if NATO just decided to get directly involved in the conflict, right? but it's just like it's not the size, it's not the amount of money that they're giving to the military that's really the issue. It's the actual help, because the kind of help that they need would probably trigger a full on war with Russia in the West, right? How do you give them that help without stepping over the line? It's the same problem that we've had since the beginning, right? Like when the US was supporting fighters in Afghanistan, for instance. You know, so this whole proxy war kind of thing is kind of, but that's like basically the way things work during in a nuclear age. Hmm. I'm kind of starting to wonder here if I should have been trying to scalp this whole range here. I don't know if these prices exactly are where I want to start doing that, but energy funds Russian machine and worse for Ukraine the longer this war lasts. Yeah, although you know what, I was well. So this was an interesting thing from Jean-Philippe Bouchot on LinkedIn. He said he cited a study where they looked at the supply of oil coming from Russia and so forth, and they said that it was basically like 0.5% of GDP in the West. So it was a meaningful hit to the Western economy, but it wasn't like a recession on its own. But what John Philippe said was that he went through and he talked about all of the fallacies in these kinds of models, that they kind of assume an equilibrium and these sorts of things. Because one of the things that he's been, well, really the quants have been pushing is um, agent based modeling techniques, where you can basically set up all of these different agents that interact in the economy and then kind of let them play out and see if when they act based on certain incentives or whatever, how does how do things end up going? And that's allowed them to get a lot of insight into um, why some of these economic models fail, particularly in crises, right? But it kind of shows you though that like for us to really do what for Germany, let's just talk Germany in particular. For Germany to really do what they need to do, that what's appropriate with Russia, they have to be able to completely cut Russia off. They can't be taking anything from Russia, is the reality of it, right? Which is tough to do. Poland, the only nation in it. Well, I mean, of course they're gonna have, of course, because they're next on the chopping block, right? They know. They've been through this. They've watched this. They've watched this story before. Okay, so we're gonna do it like that. Probably should take it from there to there. It'll take years. Yeah, I mean it will, but that's why some people have been saying. So if this conflict continues and things continue on the path that you know, the most likely path that I see forward is that we will see uh, a very long term bull market in commodities. What do we call? I forget what they're calling it, but Goldman continues to see this, right? And then a decrease in globalization. That more countries will be working to make their own supply chains self sufficient, and you'll have trading blocks. Like you have a trading block between Australia, the US, and the European countries largely. But you know, this is kind of where I see it going. Hmm. So this excursion on the downside looks a little more aggressive, even though I'm not seeing the deltas change and I can see the treasuries moving up again. But that's kind of why I'm doing all this bigger stuff. This is why it's like, even though machine learning, I think, is the thing that I need to do, where I think the opportunity is the most, the other place that I see the opportunity is in commodities in general. And so the more that we can get into the CTA world, the better. Because the way that I see this going is commodities have kind of been neglected for decades, really. And now all of a sudden they're going to matter a lot. And who knows this stuff? There's not that many people that know this stuff. And so being one of you guys, if you really understand your commodity or just the commodities complex as a whole, and you really understand how to manage positions from a more professional perspective, you know, we could come in and take advantage of some of that. And that's where, hey, you might not be trading directly, you might not be the billionaire, but uh, you'll be working for somebody else and you'll be making good money, right? And so I'm trying to move in that direction. So taking the Series 65 is just kind of like a putting my foot in the water, because that will allow me to potentially even invest and look at what funds are out there, and then we get a Series 3, and then from there I don't know, but hopefully by that point we've developed the connections to kind of give us uh, the next steps, right? Working for somebody else, managing a fund or something like that. And then hopefully on top of all of that, during all of that, I'm able to understand the machine learning a little bit better. I think that combination, understanding the commodities, having the machine learning, and understanding like the regulation side of it, even, having the FINRA qualifications for it could be a powerful combination of skills. The U.S. left more weapons in Afghanistan than they gave to Ukraine. Is that really the case? Could be. I mean, even when you're talking about like hard equipment, like tanks and stuff, it's kind of a gray zone about what they can do, right? So I don't know what you do. Oh dear. Looks like there's somebody out there trying to pretend to be me. Yep, I can see them. Hmm. How do you report them though? Copy ID. Well, we're gonna put something here in the announcements channel. So how should people on Discord verify that it is me? It's starting to get some better downside action here, and probably they're going to have to bust below the 40 area again, but that dog. Okay, so this dog that we have, the puppy, he is a great puppy, but he is starting to bark, and I don't know how to stop him. Let's see here. Last week, I was range trading with limit orders on Great British Pound, and my entry was good, and the take profit was hit, but I'm still uncomfortable with limit order entries. Swing trading off candles. I've used pivot points to add more consistent approach to the ATR, but it's hard to find any information on strategies based on limit orders unless they have something to do with averaging in and averaging down. Yeah. Well, I think that if your main thing there is going to be providing liquidity, that the best thing that you can do is find a correlation that you can use to determine a correct price. Does that make sense? So, like, if I know that the Great British Pound tends to be correlated to the US dollar in this way and the euro in this way, and I can look at the value of those things to give a rough idea of what a fair value is for the Great British Pound at this moment, and I can make it like update in real time, then I can put out limit orders that give me a pretty good chance of it mean reverting, right? So this is, you're basically statistical arbitrage. That's the only way that I know of that's, really proven to work. My neighbor has the same kind of dog. It's only 5 pounds, but she thinks she's 200. And yeah, that's exactly that. They're way overconfident for their size. Like, similar small dog, like a Chihuahua, is very, very aware of how small it is and are very timid and afraid, but Papillons are not. Papillon thinks it's a big dog. We keep telling him no bark and close, holding his snout and stuff, but he still will like see the chickens outside or something and start barking. I don't know what to do about it. Not that he would be disturbing the peace, because there are dogs outside that are way louder than him. There's our neighbor's dog, and the neighbors are okay, but that dog, I hate that dog. And if it's outside, it just doesn't stop barking at us. Well, my understanding is that you can teach them to start barking. I'm wondering though if we should just put a bark collar on him right now. So I do not want him barking. I tried training him to bark, but he doesn't seem to do it. I don't know. He does it. If I trigger him on barking about something, then I can get him to do it. But if he hasn't been barking and I tell him to bark, he won't. Okay, well, this trade in the MES seems to be working out now, and we have more than washed out the downside that we got. I think I'll put an order right there just to kind of like give myself a little bit of room in case we come back up and I want to take another order on it. In the treasuries, generally speaking, I was looking to go along the treasuries. I don't know if from 27 to 31 here is really that great of a trade, but that is one that we could have made, right? It was one that I considered, but I didn't think that it was really worth it at this point. I never heard anything from the Fed speakers, by the way. So that was probably not, we probably gave that more heed than we needed to. Lockdown and fed up Shanghai residents offered some hope as e-commerce giants start to bring deliveries back up to speed. When I was very young, delivered for Western Union, I was attacked by many dogs, but bit only once by a chihuahua. Oh, that's interesting. Well, he will bark, but I've never seen him act aggressively to someone. He'll run away. Yesterday he bit a cord and I yelled at him really loud, and that really scared him. Because he's kind of been backing away from me when I want to pick him up lately because I yelled at him so loud. But I mean, what are you gonna do? I don't want you to get electrocuted, Goku. I don't want you to be electrocuted. Emma War, all because I switched from Haikanishi even though I was making profits because people said I could get better entries with candles. Oh, I don't know, man. Listen, I've never found any of that stuff to be long-term reliable. Like here's the thing, David. When you hear people say stuff like that, the first question that I would ask is, well, what proof do you have? Right? And you don't have to make a big deal out of it, but if they don't have any kind of hard empirical proof, I would just ignore what they say. And if you've had like some success, this is the other issue, is like if you've had 3 months of success, don't take that as evidence that it works. Don't take that as evidence that it works, because it doesn't work like that. You could be dumb luck and you could have a period of, even a few years of success, right? Plugging in the cord usually stops. I don't know what makes him think the chords are okay to get into, but I haven't had as much problem with him since I yelled at him for that, so. What do I do about someone on Discord pretending to be me? When I go into Discord and I right click on them, there's no report button. When I go into my account, it's not showing me like the full name. So how do I give people something that, like, to prove that it was me? You can see him right here you see it? Speculators, that is not me. And I can go to profile, but it doesn't show me anything. All I can do is copy ID. You're lucky you're on Twitter. Well, I am on Twitter. I'm not very popular on Twitter. I've been seeing a lot of Futures Trader 71 and Anthony Crudele complaining about and reporting imposter users. But I have to say the problem is so much worse on TikTok. Oh my gosh, it's so bad on TikTok. You'll have to say you will never directly message anyone. Yeah, well, I mean, I might. Well, I almost never initiate the conversation. That's true. There have been times where people have asked me questions about like extending their demo because they just got the data and things like that. Then I get their NinjaTrader machine ID. But there's nothing really malicious you can do with that. So, but I could see where somebody might be like, I'm never going to ask you for money, right? If we're going to do a monetary transaction of some sort, like you wanted to sponsor a video or something like that, I'm going to do that through Proton Mail, right? Well, wait, where did it go? Did they just leave? I think they did. Yep. Oh, well, maybe they're just not. Mm-hmm. I'll just put that in the announcements channel. Have you done some testing trading the morning session versus the afternoon? Kind of, yeah, actually. So I've definitely when I'm back testing, something that I almost always do is try limiting the testing period to just the hours that I am active. There is definitely differences in behavior between this time period that we trade and like the rest of the session, which could be good or bad depending on the strategy. Equities traders are into the classical chart patterns. Yeah. Well, almost all futures traders use the dumb. That's actually not. I don't know if that's actually strictly true. From what I've found, actual trading the DOM is extremely uncommon in general, even amongst futures traders. Like, there's definitely a larger percentage of us in futures trading, but the majority of traders are still using charts and quote unquote price action. The most popular type of strategy by far is price action. Price action, price action, price action. They're totally into that. What was the move you're in right now based off of? It was just kind of a hunch and that the volume was sell. It's not a serious trade. Yeah, it's not a serious trade. It's not a live trade. It was kind of a more of a, hey, if they break to the downside here, it could get fun, so let's try it. So now that I've taken, well, I wanted to take another step here, and then I might take the other contract off and then try and let the last contract run to the end of the day. Forex is the Wild West. It's definitely the case, though, that the communities are completely different. There's very few people that you're seeing like promoting trading all the different types. Does your platform have historical? Yes. So NinjaTrader 8 does have historical backtesting. You don't necessarily have to have the full version of NinjaTrader to be able to do that. The data that you get is really has more to do with which your data provider you're using, whether you're using CQG or Rhythmic. I've found that the tick replay data may not necessarily be accurate. I've created my own indicators that kind of output the data, but I haven't really gone too far with that yet, like in terms of back testing it off of that data. Maybe I should try and spend some time on that this week. Last time I tried to do it, I ran into a problem, and then when I was working on another indicator, I solved the problem, and I think I fixed it in those indicators, but I never went in and I don't know where I got stuck. I don't remember where I got stuck. So I need to go and look at that again. Do you think that moves like just like the one you were in can be? No, I think there was just random dumb luck, dude. I mean, I guess I have a pretty good idea of what the sentiment is today and everything, but I think that this is mostly dumb luck. Like, I don't think that you could take the trade that I took today and try and do that every day and be profitable with it. No. Anyways, we did this survey about like what are the different strategies that people use and stuff, and price action was the most popular by far. I think the reason that is because number one, it's like a really innocuous term, right? It's like, oh well, of course the price moving matters, right? It's kind of like that. Plus, um, it's just like they are always the strategies that take on a lot of risk, right? Like these are the guys that will have stops twice as big as their targets, double down, all of this sort of thing, right? So I think that's why it ends up being popular. Oh, you were watching? Yeah, I saw that Ninja Trader was doing morning live streams. It's really interesting to me how you continue to see other creators in the space trying, come in and start doing the live streaming. I think it might be because they've seen how successful Matt has been, but I don't think they really. So like here's the thing, especially if you're like a platform, okay? Like let me give you guys some tips here, okay? Matt, his channel is not popular because of the live stream. In fact, I'm not sure that if you got rid of his live streams, if the uh performance of the channel would be any different. You get so much more visibility from VODs. It's insane. Okay. The YouTube algorithm doesn't really push live streams. So most of the viewers that Matt has came from searching about price action or whatever the deal was, and then they saw all these videos that were like, oh, he's making money, and the algorithm pushed because of that. But if all he was doing was live streaming, you wouldn't get very far, right? So if I was Ninja Trader, I would be making small short videos about something cool you can do in Ninja Trader. Here's a little trick that most people don't know in Ninja Trader, and it should be like a 5-minute video, 5 to 10-minute video, and that's it. And just post as many videos like that as you can, right? That's going to get you so much more visibility. The live stream is really more about the users that you've already acquired and are highly engaged in your content already. That's like what we get, right? The group of you guys that are here on YouTube, it's the same 2 to 3 dozen of you every day, right? And so what is the benefit of the live stream to me and my channel? Well, I mean, when I enjoy it, but really it doesn't help me grow my channel all that much. If I took all of the time that I took live streaming and put it towards making videos, my channel would probably be a lot more successful. But I don't think that I would be able to help you as much because there's some real benefits from being able to do it live and work with the audience live is how it goes, right? So okay. So at the very least, I can ban this user so that he can't try and talk to people on our Discord, and I have his user IDs, so we can report that. He was scalping limit orders on price action. So he's actually taking trades for NinjaTrader, huh? Do you think education and educators on brokers channels? I can't. There's a YouTube channel called Trades by Matt that's done very, very well the past 2 years. So, and he does the similar sort of things. He will scalp orders on quote unquote price action. He will double down and average into positions. He'll tend to make money. He'll have like these periods where he'll make a ton of money, and then one day he'll just blow the account, and then he starts over again. So like, this is what I'm saying is like, and it's not a knock on him. Like, if Matt was here, I would love to talk to him. I've never really been interested in like reaching out because it's like I'm doing my own thing. But if you know, and I'm not really interested in what you do. But if you're interested in what I do, then let's talk. But I don't think that a lot of these guys realize that, oh, hey, if you go and you do a strategy like that and then you blow out and you always say, oh, it was me, I shouldn't have done that, I was being dumb, yada, 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 yada. But the reality is that all of the profits you were making before then was because you were doing those sorts of things. And so you think that you've proven through your trading and your performance that the method works, but that's not really the reality. The reality is, to prove that sort of thing, you would need like 5 years performance, and we'd need all of the stats, like what's your Sharpe ratio and what's your drawdowns and all of that sort of stuff, right? And then when you look at that data with what they've done so far, from what I can tell, you're going to see that mostly what they're doing is taking on risk. Okay. I think that Matt understands that to some extent. I don't know if he properly stresses to his audience that that's what he's doing, right? So I don't know about what they're doing on NinjaTrader. I'm surprised that they're running a live stream and taking live trades on their live stream. I'm quite surprised. Because I don't know. Like, here's the thing. You can come in and do like what I'm doing right here on the E-mini, right? This isn't a live trade, and I'm always really clear when I do these sorts of things what I'm doing, right? But this trade worked out, right? If it hadn't worked out, I could just cancel it and everybody forget about it, right? The reality is the reason that this trade is working is because I took on a lot of risk to do it. I put on 3 contracts. I was never had a stop set. I was willing to let it go quite a bit against me, right? So generally speaking, what will happen is I could have had a move where they, like, let's say that a spike happened and then I puke it, right? So if I puke it, that's like a huge loss. That could be like a huge loss. It's on a sim account, so to me it doesn't matter. And what do the people on the stream do? They forget about it. It's so funny. It's like people just when you blow out, people just magically forget about it. I think I've seen a lot of people kind of on when Matt's name gets brought up, kind of say, well, yeah, but he has like blown accounts and stuff. But generally speaking, it doesn't hurt the channel. The channel will continue to go because the audience just forgets about it. But I do wonder if you start to promote a platform using that kind of trading, if it doesn't hurt the platform. I don't know. They're kind of playing with. I'm surprised to hear that they're taking live trades on it, but that's they can do that. It's a lot of traders do this. Steve Ruffles uses no stops. It seems like high risk, high reward, enjoyed by some people. Yeah. But that's the thing is, I don't think that most retail traders realize that that's what it is. You know? Like, so if you get some time, if you're bored, man, go and find that thread about traders who've been trading for 5 years and are profitable on futures.io. and read that whole thread, because I go in and I talk about this, that, hey, you can come in and take on excessive risk. And if you take on excessive risk, most of the time you will make money, but then you will blow out eventually at some point. Like, that's what the taking risk thing does, is like volatility gets crazy and you blow the account. And most average person does not, when you come into trading, you never think that that's what it is. You never think that, oh, in order to really know what the performance of something is like, I need like 5 years of data. They don't think about that at all. They think, oh yeah, this guy, he traded all week and he was successful. That must mean his method works, right? Or I did it for a month. That must mean his method works. No, man, 5 years, like 5 years. You don't have 5 years, then it's just like, it's noise. You can't make any conclusions off of that amount of data. Okay. It's just like the math. And I tell you, I've backtested a trillion things. Okay. I can show you so many things that look great over a 3-month period. I can show you so many things that look great over a one year period. But when you go to 5 years, all of a sudden it's like nothing works. Right? It's really like, that's a huge step up. And once you realize that 5 years is really what you need to be able to really tell the historical performance of something, that really changes your view on things, right? Because ain't nobody out there posting full 5 years worth of performance results. I've never seen somebody post that. Never seen. Here's the thread. I'll link you to it right here. That's the thread. Okay. So I go in that thread and I explain all of this stuff, right? And then what happens? Somebody else will come in the thread and they'll mention somebody on YouTube that I've never heard of before. And they say, well, they were trading this for a week and they were doing really well. So there are people out there that are doing it and that are successful. And I'm like, no, it's the same problem. They're taking on risk and they don't have a large enough trade history for you to make any conclusions. And this happens like 3 times. This happens like 3 times. It's a losing battle. Like, you can't. The reality of this situation is this, guys. It's easier to fake being profitable than it is to be profitable. You would think that it would be pretty hard to fake being profitable, but actually, it's not that hard. The only thing that makes me unique is I'm sitting here the whole time telling you guys all of the problems with these things. And telling you, hey, like, I'm taking on risk here for entertainment purposes. I don't expect that you would make money from doing this. And micros is a different story. In micros, I'm trying hard. I've made some mistakes. It's not quite there. It's not quite there. I've been doing well, but it's not quite there. Yeah, I don't know if that's true, but yeah, I've seen people. So the kind of the thing that first kind of tipped me off to this sort of thing was him, because he said, oh yeah, like, they got a robot, and then they showed me the results, and the thing was taking a stop 4 times larger than their target. So it really had to be like, you would have to maintain a 90% win rate, right? And it really is the case of, you take on the excessive risk, so in the short time it looks good, and that fools most people. Like, seriously. Isn't it all about money management? Well, that's what somebody without a real edge would say, to be honest with you. So I don't mean to be like, oh man, this is so hard, because I don't want to be like I'm trashing everybody else, because I know that everybody's trying. There are some people that are just outright trying to scam you. Okay. Like, if they're offering you a software package, like indicators that cost more than the platform that they're built on, that should be like a huge red flag. Right. Okay. But there are a lot of other people that are really trying their hardest, and they just don't know any better. And I don't know how to, like, it's, hey guys, come and watch my channel, come and learn about market microstructure and things that are proven, things that have real empirical research studies backing them and are incredibly, the square root law of meta order impact. It is a law. Literally, anytime you execute a meta order, it will tend to follow that square root law. Very consistent. Okay. I don't know how to prove that that's, can result in a positive trade for you. I can just prove that it's something that exists and nobody else on YouTube is talking about it. Okay. And I wish that more of these guys would come and watch that stuff and come and say, hey, Seth, I actually, let's look at some of that sort of thing. But I don't think that anybody's ego would ever allow them to do that, because especially on the price action, like I really feel like that price action is like a strategy for ego. It's like it kind of lends itself towards somebody that never wants to take a loss. And then when they do take the loss, they can just blame it on, well, I shouldn't have done that one time, but the strategy still works, right? Because they don't want to have to admit that it's really random. That the reason it works isn't because of the setup. It's just that the setup that you're doing, all that does is make consistency, but it doesn't give you a positive expectancy. The only thing that's creating profits for you is the amount of risk that you're taking on per trade. That's it. Right? There's a guy called CryptoCred, and they have videos on market microstructure. I have to look that up. Copy. I will look those up and see if we can find them. See what they're talked about, if it's the same stuff or not. Because I made those videos and I haven't really, the YouTube hasn't picked up on them as much as I would like, but anyways. But David says, I still feel like things like money management and psychologies are things that are just crutches and excuses. That's exactly what it is that if you don't have an edge, the best thing that you can do is you can go in and manage risk. Essentially what you are noise trading with risk management, okay? And if you are noise trading with risk management, you can modify, that doesn't necessarily give you a positive long-term expectancy. But what you can do is you can modify the statistical properties of your strategy, right? You can, instead of having a strategy that is like this, which is what mine kind of does, you can have one that's like this. Maybe like this, way bigger peaks. And it's like really, it would be more like this. Right? That's what they're doing. The long-term expectancy of it is still that you're going to lose everything. But people ignore this thing. They only pay attention to this thing. That's what you're doing. That's what risk management basically means. Right? Because in order to really have an edge, you really have to have something that will give you a probability of predicting which way it's going to go more than often than not. Right? And the way that they fool themselves or fool you is they ignore the fat tails. So they come in and say, well, if you do X thing, it's going to come out this way 50% of the time. But then that doesn't factor in the 1 month where it did terrible. They say, oh, that one doesn't count because that was me being dumb. But actually it does count. It's actually, that happens because of the strategy. It happens because of the strategy. I'm telling you. Right? That's why I like this idea that you can make money just from risk management. It's false. It's not true. It's not true. You really go into this the data. Like we could pull up the spreadsheet again. I could show you, but anyways. So what do you do? What do you do about it? There's nothing you can do about it because that's like just the way that people think the world works, and they're gonna go for that every time. But the main goal here is not necessarily to have a popular YouTube channel. The main goal here is to make as many of you successful as possible, and to be as successful as possible myself. And, the reality is that the opportunities for you to really, really, truly make money in futures is very, very limited, and it's pretty hard, and it's not really a very, I would only do it if you really, really enjoyed it. And, probably the real money is to transition into like a CTA strategy or working for somebody else. even though there's not really any bridge right now into working for somebody else, but maybe we can build that, right? I hope that we can build that. That's the reality of it. That's just, don't shoot the messenger. That's just the data that we have says. So, is what it is. But that's what I see out there, and I can call it out to try and help prevent you guys from falling victim to that sort of stuff. But it's always going to be a thing, right? I'd be concerned that Ninja Trader themselves are falling into that trap. But who knows? Maybe the guy is actually like really, really good and does have a 5-year record for all I know. I don't know who that guy is. Yeah, Paradise Matt decided that, from my understanding, he decided that the drama was not worth it and has kind of gone into hiding. But maybe you'll see him back someday. I don't know. I don't really know the guy too well. I don't really, honestly, I interact with Futures Trader 71 and Anthony Crudelli on Twitter because those are like the two guys that I think actually have are sharing reasonably decent information. Although I really feel strongly that what we've built on this channel is much more advanced knowledge than anybody else out there is sharing. But other than that, I don't really interact with many creators very often. If people reach out to me, I'll do it. But who do I reach out to? I reach out to the people that are doing research on market microstructure, the people that are doing research on this machine learning, like the top of the people in the field. And the unfortunate thing is that, they have much more important things going on than talking to retail traders. So kind of a raw deal there, but those are the people that I'm trying to work with. Well, hey, we've got plenty of stuff to come. I think tomorrow, don't miss CPI. In the meantime, stay profitable, friends.